Hello everybody, welcome back to the channel. In this video I'm going to talk about the price of coins and kind of just some random thoughts about how things work, right? You're probably down about the price. I mean, hey, markets are crashing everywhere. Traditional markets, crypto markets. There seems to be a lot of fear in the system based on the fact that we've been printing money out of thin air for the past 2 years and nobody really seems to know what inflation is going to continue to do. But I just want to touch on a couple of thoughts, okay? So if you're worried about the HEX price, I know I say this like a broken record, but the HEX price has dipped significantly 7 or 8 times, depending on how big of dips you're counting. I mean, HEX has had at least 7 dips over 50%, and we're experiencing one right now, and typically all these dips have only been great buying opportunities for people to change money from the hands of the inpatient to the hands of the patient, who are then the new holders and the new gainers on the next run-up, and hopefully the next staking class, right? But I want to talk about the fact that patience really is a virtue, and let's look at a coin like Dogecoin, for example, okay? Now, this is a chart that looks ridiculous, right? It kind of looks like the HEX chart right now if you were to look at the HEX chart on a linear scale, right? People look at this chart and they see, oh look, pump and dump. But they don't see what's happening in this long tail back here, guys. Because of the exponential nature of cryptocurrencies, this long tail always looks like a flat line unless you click the log button, okay? This log chart shows you what's actually going on. If you were experiencing the price movements up and down during this time, it would not feel like a flat line to you. It's only because prices over here were exponentially lower than current day prices that this whole chart kind of looks like a flat line during the first half of it, right? This is true for Bitcoin and this is true for everything else as well. So that's why I always stress using a log chart, right? Because it's easy to say, oh, I would have just bought anywhere over here. Oh yeah, would you? Because on the log scale, what if you bought here and then you had to experience this 70% dip or this 50% dip here or this massive, 4-month long 50% dip that never seemed to end, almost 5-month long, right? It stayed at about 0.003. So people don't realize that this mentality happens time and time again, and people always get into these cycles of fear and greed. Fear and greed happens time and time again like clockwork. And this is when smart money is actually loading up their bags. And let's take a look at Dogecoin, okay? Like I mentioned earlier, this crypto chart looks like almost every other crypto chart that has stood the test of time. I mean, just by virtue of existing since 2013, Dogecoin has gradually gone up and to the right with nothing but a community behind it. I mean, there's not even any active development on it. Sure, maybe there's a couple more on-ramps because it's had 7 or 8 years to become a meme, right? It's a total meme coin. That's all it is. It's a coin with a picture of a dog on it. Doesn't do anything. It's actually worse than Bitcoin and less secure. It's a fork of Litecoin, which is a fork of Bitcoin, and no one's working up on it. Even the creator thinks it's a joke, right? The creator doesn't even like his own invention, but a bunch of other people do, and they're all over Reddit, Twitter, etc., the Dogecoin fan club or whatever. And let's take a look at, this is like the 8 or 9 year chart of Dogecoin, right? But let's take a look at just 2 years at a time, right? So let's look at 2014 to 2016. Oh, doesn't that just look like a giant pump and a giant dump, right? Kind of looks like Dogecoin will never recover because it's flatlining. Well, let's go from 2016 to 2018. Oh look, more flatlining and then another pump, a dump, and then a giant pump again. Now let's see what happened from 2018 to 2020. Giant pump, giant dump, and then these impulses, right? You get these impulses of hype followed by new floors. And the floors in Dogecoin last a lot longer because there's really, quite frankly, not that much going on for Dogecoin other than the occasional hype cycle. But that's what all these crypto charts look like that stand the test of time, right? There's impulse waves of hype, of new buyers, and then there's a crash down to a new floor price that tends to be higher than the previous floor price. Not always, but in some of these older cryptos, you can really get a grasp on it. And you can see visually that it comes down and settles at, still a higher price. I mean, so this time it settled at 0.002 cents, whereas in 2014, we were lucky to settle at 0.0001 cent. And I'm not endorsing Dogecoin at all, guys. Simply an example of how many crypto charts look. So 2018 to 2020, we've got, impulse waves and new floors, right? New higher highs. It just takes a long, long time in a coin with not much community and not much infrastructure being built around it, right? 2020 to 2021, or now 2022, right? It looks like another flat line relative to the previous 2 years. And then giant pump on Elon Musk gets up to 68 cents, goes all the way back down to 20 cents. Hey, maybe it'll find a new floor around 10 cents this time. But every time, it seems to be making new all-time highs. But what does that look like in the grand scheme of the chart? See, you, looking at this linear chart, you only see 7 years of flatline and 1 year of pump. So it's easy to point a finger and say, look, pump and dump. Not really, right? Again, that's why we stress the log chart. Look at this log chart. Dump, flatline, pump, dump, flatline, pump, dump, flatline, pump, dump. Like, It's just the same cycle over and over, is what I'm trying to say, guys. Now, the Dogecoin price really does go up and to the right. It just takes an absurdly long time to do that. It's taken 8 years for Dogecoin to do this, whereas HEX has done more in 2 years alone. So you can only imagine at the pace we're going. I mean, we're outpacing Bitcoin's rise, honestly. It's controversial to say, but it's actually true. Go put a Bitcoin chart, log chart, overlay it on top of a HEX chart, and you can see right here, guys. I mean, Gerardo did this for us, right? You can see that the ROI since inception on HEX is actually outpacing Bitcoin. So when the bear market comes and you're deciding what assets you want to hold, right, HEX seems like a logical option to me because you know that it's doing what crypto does in its cyclic form. The concept that I want to convey is that every cycle that this happens, some portion of the new people that get in become long-term stakers because they have that option to enter the staking class, to enter a realm of investors that are actually making millions of dollars with the staking ladder system. Like, it's happening today, and some people recognize this, and they're staking for 1, 2, 3, 5, 10, 15 years. And so basically every impulse that we get, unlike Dogecoin over here where we have a bunch of buyers and then a bunch of sellers and we require us to find a new floor, well, some percentage of those would-be sellers in the HEX chart turns into stakers, right? They turn into stakers. So there will always be people riding the wave and buying and selling. The difference with HEX is that when there are these massive sell-offs, it's not everybody that's selling off. There is some fraction of users that chooses to become a member of the staking class and thus hold the price up by delaying their gratification and taking coins off of the market and launching them very, very far into the future in order to get the HEX interest rate. So in most coins, you have 100% speculators, whereas in HEX, you can actually verifiably see with this chart in front of you that there is not 100% speculators. There's a ratio of pure speculators to total believers, right? And there's a range of everyone in between. So with HEX, it's important to realize that what you care about is this ratio of speculators to believers, or should we say traders to stakers, or short-term minded people to long-term minded people. There's always some ratio, but the short-term minded people end up shaking themselves out. They end up selling at a loss because they're emotional and their time preference is too low, whereas the longer-term stakers always prevail. Now, this has been true in Bitcoin too. Bitcoin fell from 1,200 down to 200. I'm sure a lot of you guys would have sold, right? But hey, HEX is actually paying you to save yourself from being shaken out. So that's the beauty of it right there. I mean, HEX really is repurposing a lot of the Bitcoin narrative, but only the good parts. I mean, this revolution really is the greatest wealth transfer in human history. I'm talking about the crypto revolution in general. But the greatest wealth transfer in human history can't work any longer with a coin that is institutionally owned, that's only traded by high net worth individuals now on Wall Street, where the only people that can move the price are people with billions and billions of dollars, way more money than you and I. Michael Saylor, Elon Musk, those kinds of people, right? And so you have Bitcoiners begging and pleading the very institutions and authorities that they aim to escape from to pump their bags because those are the only people left. So HEX is almost like a fresh start at trying to do Bitcoin over again with a retail-friendly model. And again, I think it's great to get in before the institutions come for HEX, which eventually I believe they will. Eventually we will have, publicly traded hedge funds, and people like Coinbase and FTX might start to take notice. And when these big institutional players move in, they corrupt the system for the little guy, and basically they make it harder for the gains to happen, okay? Because it requires so much money at that point to move the price up and down, whereas in this retail-friendly game, you can still experience, I believe a 10,000x is easily possible from here in HEX. It sounded crazy, right? But hey, it sounded crazy a year ago as well, and look at the amount of X we've made since then. So you need to think about this on a multi-year time frame, guys. The game that we're all playing is a multi-year game. And one other kind of philosophical point I was thinking about is that when we look at charts, right, as people, when we look at charts, we tend to zoom in only on the right side of the chart, right? We have a recency bias is basically what that's called. The memory of what happened most recently is most freshly imprinted in our minds. So it's hard to think about and look back and zoom out on the chart to see what the price has done in the past. So people see, oh, this was the all-time high. This is the recent low that we're making from the all-time high. It's a 70% drop. So this recency bias makes it feel like the sky is falling, but on the flip side of this recency bias, I believe that the optimistic among us create a sense of possibility and probability that the chart enters never before seen space. See, it's easier for us to perceive something as growing rather than dying, right? As long as the idea stays alive and is maintained by the community, it's easier for us to physically look at the right side of the chart and say, look at all that space up to go from here, rather than look at all the way down we could possibly crash. Right? So in a way, our recency bias actually helps us, right? The only area that's uncharted in this chart, in any chart, is up and to the right, in this empty space up here for where new all-time highs lay one day, right? Everything else has been charted. The territory from 0 to here has all been charted, and so it's easier for us to imagine going into uncharted territory with our sense of possibility and our community. The idea simply must not die. That is all that matters. Now be warned, guys, you've got a lot of bearish news in the general crypto markets right now. The Mt. Gox coins from the Mt. Gox trustee could unleash on the market at any moment, crashing the Bitcoin price even further. There was just some news about Federal Reserve officers being mandated to sell their crypto positions to prevent a conflict of interest, as they call it. Now, is this part of a greater scheme? That is up to the conspiracy theorists within every one of us. We can speculate about their reasoning all day long, but if the Fed sells all their crypto, they're also no longer incentivized to necessarily treat crypto as nicely, right? You want people in the Fed and people in government to have bags of this stuff so that they're incentivized by the gains as well. They're incentivized to get rich and create and foster a friendly environment for the crypto community to grow in the USA. So you've got all this stuff going on. You've got the Fed seems to be gearing up for new crypto regulation. They seem to be selling. Luckily, they probably don't have much crypto left. But again, with no bags, how incentivized are they to help us crypto guys out, right? And then you've got, of course, things like the grayscale deficit, for example, right? People can buy Bitcoin or notes that track a Bitcoin at a deficit, at a literal lower price than the actual Bitcoin costs. This is a bad sign. This is a sign of a bear market. Typically in grayscale GBTC, there's a premium. Richard Hart talks about this. The premium indicates future bullishness. The deficit indicates a very bearish sentiment right now. So how much lower does the greater crypto market have to go? I'm not sure, right? It could continue to go for a couple months, even another year, right? Bear markets in the past have typically found a full year before they reach their lows. Now, the good thing about HEX, as I mentioned in the previous videos about how HEX can actually protect you from a bear market cycle, is one, the crazy APY can offset any potential gains even within a year. Let's say you're making 40% APY, the price drops 40% in a year, your APY puts you at break even, right? There's also the decorrelation effect with our primary liquidity pair being tied to the US dollar. So we are not necessarily tied to the price of Bitcoin and the price of Ethereum, because the easiest way to get HEX is with USDC itself. Now, we can't help the fact that the crypto narrative does affect HEX. We can't ignore that when there's fear, uncertainty, and doubt in the overall markets, that does affect crypto in general. And HEX is a cryptocurrency, right? It's still a speculative asset. I'm not ignoring that fact, but due to Hart's law, we're insulated by being primarily tied in our liquidity to USDC. And finally, with the Pulse Chain hype right around the corner, with Pulse Chain launches, this is going to bring a lot of new eyeballs and attention on HEX, because you'll be able to onboard people without having to pay an arm and a leg, and you'll be able to be in an environment that's insanely cheap and insanely fast, fixing the user experience issue with Ethereum, and really gearing us up for mass adoption. So those are just a few thoughts in my head that I've had about the HEX price lately. Granted, there are continued sacrifice phases going on for other projects like liquid loans, which might be contributing to the short-term dump in the HEX price. However, things don't fall forever, guys. Markets will return. And you want to be on the right side of history, where you want to be one of those patient individuals that's paid by the hands of the impatient. That's all I've got for you today. I hope you learned something. Make sure to like, subscribe, share, leave a comment, and I'll see you on the next video.